Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far 13 problems I have completed on this topic of CVP analysis. If you are continuously watching all the videos, all the problems, definitely you will be in a position to solve the problem on CVP analysis. It's a very interesting topic. And one more thing, every problem will be a new problem, different problem. This video I'm going to continue from problem number 14, and these problems are very important from examination point of view. Most of the examination they have asked this type of problems which I'm going to explain in this video. So watch the video till the end to get the complete command on this topic of CVP analysis. If you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject Financial Decision Making 2. Select the videos of CVP analysis, watch all the theory videos and formulae. Remember, the problems are based on the formulas. Keep a notebook, calculator, pen ready while watching the video. Whenever I say something important, note it down, write the formulas. Then only you can be able to enjoy learning the topic of CVP analysis. Now, before starting the 14th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the answers from 14th problem, then I'll explain every point. Now, see the problem number 14. Find PV ratio and margin of safety. The two items you have to calculate, PV ratio and MOS, when sales, variable cost and fixed cost are 10 lakh, 4 lakh and 4 lakh respectively. So we are given the sales, variable cost and fixed cost, and we need to calculate PV ratio and MOS. Now see carefully, straightforward problem, easy problem. Only the thing is you have to remember the formula. PV ratio we have to find out, MOS we have to find out. Sales are 10 lakh, variable cost 4 lakh, fixed cost 4 lakh. PV ratio. The formula is C by S into 100. In place of C, we can substitute either S minus V or F plus P, whatever information is given in the problem. In our problem, we are given S and V. So I am writing S minus V by S into 100. 10 lakh minus 4 lakh divided by 10 lakh into 100, 6 lakh by 10 lakh, 60%. So we got one item PV ratio as 60%. Now break-even point, it is asking you, we'll calculate the BEP. The break-even point is equal to fixed cost by PV ratio. Fixed cost is given in the problem 4 lakh. So 4 lakh by 0.6 you'll get 6,66,667. This is the BEP. Why I have calculated BEP? By using BEP, I'm going to find out MOS. It is asking you margin of safety. You know, margin of safety, the formula is actual sales minus break-even sales. So what is actual sales? 10 lakhs. And break-even sales, 6,66,667. So 10 lakh minus 666,667, you will get 3,33,333. This is the margin of safety. That's all. So 14th one completed. Now I am coming to 15th problem. From the following information, calculate the BEP and turnover required to earn a profit of 3 lakh. Turnover means sales. Sales required to earn a desired profit of 3 lakh. Fixed overheads means fixed cost. The fixed overheads are 2,10,000. Variable cost per unit is 20 rupees. Selling price per unit is 50 rupees. Per unit is given, so we can calculate BEP in units. If the company is earning a profit of 3 lakh rupees, express the margin of safety available to it. So three items we have to find out. First BEP, second sales required to earn a desired profit, and lastly MOS, margin of safety. That's all. Now we'll begin with the information given. Fixed overheads or fixed cost is 2,10,000. Variable cost per unit 20 rupees, selling price per unit 50 rupees. You know already the formula we have applied in so many problems. BEP in units is equal to fixed cost by SP per unit minus VC per unit. So 2,10,000 divided by 50 minus 20, 30, so 7,000. We got BEP in units 7,000. Now easily we can convert it into BEP in rupees. So BEP in rupees is equal to BEP in units into selling price per unit. So 7,000 into 50 rupees selling price, you will get 3,50,000 BEP in rupees. So first of all, BEP we have calculated. Now I am coming to the next question. Sales required. First of all, we calculate PV ratio. Because without PV ratio, we cannot attempt to the second question. Sales required to earn a desired profit. We need PV ratio. So PV ratio C by S into 100. In place of C, I am writing S minus V because we have sales and variable cost. Selling price and variable cost we have. So S minus V by S into 100, 50 minus 20 by 50 into 100, 60%. So PV ratio we got 60%. Now the question is sales required to earn a desired profit of 3 lakh. Already in the earlier problems we have applied this formula. Sales required to earn a desired profit is equal to fixed cost plus desired profit divided by PV ratio. So everything we have. The fixed cost is given in the problem 2,10,000. Desired profit here it is given 3 lakh. And PV ratio just now we have calculated 60%, 0.6. So 2,10,000 plus 3 lakh, 5,10,000 divided by 0.6, 8,50,000. 8,50,000 is the sales required to earn a desired profit of 3 lakh. Next, profit is equal to 3 lakh. Margin of safety, how much? When profit is 3 lakh rupees, how much is the margin of safety? It is asking in the problem. Already we know two formulas are there for MOS. One formula is actual sales minus BEP sales. And the second formula is profit by PV ratio. So here profit is given 3 lakh and PV ratio just now we have calculated 60%, 0.6. So it comes to 5 lakh. Margin of safety, 5 lakh. That's it. So we have completed 15th problem. Now I am reading out 16th problem. Remember, the 16, 17, 18, these three problems are very, very, very important. Now, 16th one. Calculate the PV ratio, BEP and sales required to earn a profit of 1,20,000. So three things we have to calculate. What is the information given? Details, sales and profits are given. First year and second year. This is the first problem where 2 years data is given. First year data and second year data. For first year we are given the sales and profit. And second year also we are given the sales and profit. So whenever 2 years data is given, we apply the formula of PV ratio as change in profit by change in sales into 100. First time I am applying this formula. In the earlier problems I have never used that formula because 2 period data is not given earlier. Now it is given. That is the new point. Now here are given first year and second year. First year sales are 4,50,000 and the profit is 60,000. Second year sales are 5,10,000, profit is 75,000. Now the new formula of PV ratio. PV ratio is equal to change in profit by change in sales into 100. How much profit changed from first year to second year? 60,000 to 75,000. How much it is changed? 15,000. 75 minus 60. So 15,000 is the change in profit. Similarly, what is the change in sales? Last year sales 4,50,000, current year 5,10,000. So 510 minus 450. You will get 60,000 is the change in sales. So 15,000 by 60,000 into 100, 25%. So we got the PV ratio 25%. First question completed. Now we need the fixed cost. Without having the fixed cost, we cannot calculate the BEP. BEP, we need the fixed cost. And fixed cost is not given in the problem. By using the PV ratio formula, we can easily find out fixed cost. How? PV ratio is equal to C by S. In place of C, we can write S minus V or we can write F plus P. But I prefer F plus P because we need fixed cost. I need fixed cost. So here in place of C, F plus P by S. The PV ratio already we got 25%, means 0.25 is equal to F plus P. F stands for fixed cost. We don't have. Plus profit. We have the profit. But two profits we have. Last year profit and current year profit. Take any one of the year's profit. Any one of the year. Let the first year will take. The first year profit is 60,000. So in place of P, I am writing 60,000. S stands for sales. Take the sales of the same year for which we have taken the profit. We have taken the profit for the first year 60,000. The same year, what is the sales? 4,50,000. I have taken 4 lakh. Even you can take the second year also. If you want to take profit as 75,000, you take sales as 5,10,000. Any one of the year you will get the same answer. Right? So I am taking the first year's. First year profit, first year sales. Now F plus 60,000, cross multiplication. F plus 60,000, I am writing down here. Cross multiplication. So F plus 60,000 is equal to 0.25 into 4,50,000. So 0.25 into 4,50,000, 1,12,500. Now bring this 60,000 to RHS. So plus 60 will become minus 60. So 1,12,500 minus 60,000, 52,500 is the fixed cost. That is not given, we have calculated. Now easily we can find out the BEP. So many times we have applied the formula. BEP is equal to fixed cost by PV ratio. The fixed cost just now we have calculated 52,500 and PV ratio is 0.25. So 2,10,000 is the BEP. The last question is sales required to earn a desired profit of rupees 1,20,000. In the earlier problems also we have applied the formula. Hope you are writing down all the formulas. Formulas are very, very important. If you remember the formula, the chapter will be very easy. So sales required to earn a desired profit. The formula is fixed cost plus desired profit divided by PV ratio. So fixed cost just now we have calculated 52,500. Desired profit 1,20,000. PV ratio 0.25. So 172,500 by 0.25, 6,90,000. So 6,90,000 is the sales required to earn a profit of rupees 1,20,000. Right? That is the end of the 16th problem. Now I am coming to the 17th problem. The 17th problem is almost exactly similar to the 16th problem. You don't find any difficulty. Given 2015-2016, 2-year data is given. For both the years, we are given the sales and profit. The 2 years data is given, sales and profit. Calculate PV ratio and BEP. Exactly same procedure what we have done in the previous problem. Now, year 2015-2016, sales are 10 lakh, 12 lakh. Profit are 2 lakh, 2,50,000. Formula as usual, PV ratio is equal to change in profit by change in sales into 100. Change in profit, last year profit 2 lakh, current year 2,50,000. So 50,000 is the change in profit. And change in sales, 10 lakh to 12 lakh. 2 lakh rupees is the change in sales. So 50,000 by 2 lakh into 100, 25%. That is the PV ratio. Now we need fixed cost. Without fixed cost, we cannot get the BEP. So how to calculate fixed cost? Use the same PV ratio formula. So PV ratio C by S. In place of C, I am writing F plus P because I need F, fixed cost. So PV ratio we got 0.25, fixed cost plus profit. Take the profit of any of the 1 year, first year or second year, any one of the year. The first year profit 2 lakh and first year sales are 10 lakh. So in place of P, I am writing 2 lakh. In place of S, I am writing 10 lakh. So 2 lakh divided by 10 lakh. Now cross multiplication. Now F plus 2 lakh is equal to 0.25 into 10 lakh is 2,50,000. 0.25 into 10 lakh, 2,50,000. Now take this 2 lakh to RHS. The plus will become minus 250 minus 2,50,000. We got the fixed cost as 50,000. Now, easily we can find out the BEP. Break-even point is equal to fixed cost by PV ratio. Fixed cost just now we got 50,000, PV ratio 0.25. 2 lakh rupees is the BEP. That's all. This is the end of problem number 17. Now, 18th problem. See the 18th one. The following figures for the profit and sales are obtained from the accounts of X Company Limited. Again, 2 years data is given, 2018, 2019. Sales are given, profit is given, exactly similar to the last two problems. But one more extra point we have to calculate. Calculate the PV ratio, fixed cost, break-even sales, profit at a sales of 40,000 and sales to earn a profit of rupees 5,000. So 5 questions are asked. One by one we will attempt. Very easy. After watching this 17th and 18th, 16th and 17th problem, easily you can do the 18th problem. Now year 2018, 2019, sales are given 20,000, 30,000, profit is given 2,000, 4,000. Now PV ratio, change in profit by change in sales into 100. Change in profit from 2,000 to 4,000. How much is the change? 2,000. So change in profit 2,000. The sales are changed from 20,000 to 30,000. 10,000 is the change. So 2,000 by 10,000 into 100, 20%. First question completed, PV ratio. Second question is fixed cost. To calculate fixed cost, again we make use the formula of PV ratio. PV ratio is equal to C by S. In place of C, F plus P by S, right? F, fixed cost, we have to find out. Now take the profit and sales of any one of the year. I am taking for the first year. First year profit is 2,000 and sales are 20,000. So P in place of P 2,000, in place of S 20,000. Now if I make a cross multiplication, F plus 2,000 is equal to 0.2 into 20,000. So 0.2 into 20,000 you get 4,000. Take this 2,000 to RHS, so plus will become minus. 4,000 minus 2,000 is 2,000. So we got the fixed cost as 2,000. So 2 items we have calculated. We have calculated PV ratio, we have calculated fixed cost. Now easily we can find out the BEP, fixed cost by PV ratio. The fixed cost is 2,000, PV ratio is 0.2. So 2,000 divided by 0.2, 10,000. 3 questions, 3 bits we have completed. Now fourth one, profit is equal to how much when sales are rupees 40,000. If the profit, if the sales are 40,000, how much would be the profit? So again we'll make use the PV ratio formula. Remember, PV ratio is a formula, is a multi-purpose formula. In many situations we apply PV ratio to find out a number of things. So here we have to find out the profit. I'm taking the help of PV ratio. So PV ratio formula C by S. In place of C, I'm writing F plus P by S. Because I need profit, that's why I'm taking F plus P. So PV ratio 0.20. F, fixed cost. How much is the fixed cost? 2,000. Plus profit, we don't know the profit, we have to find out the profit. How much are the sales? Sales are 40,000. So in place of sales, 40,000. Now cross multiplication. Here when I make the cross multiplication, 2,000 plus P is equal to 0.2 into 40,000. 0.2 into 40,000 you get 80,000. Oh, sorry, 8,000. So P is equal to 8,000. Take this 2,000 to RHS minus 2,000. So we got the profit of rupees 6,000. That means if sales are 40,000, the profit, expected profit is 6,000. That's all. 4 bits I have completed. Now last and final bit. Sales required to earn a desired profit of 5,000. Many problems we have applied the formula. Sales required to earn a desired profit of rupees 5,000 is equal to fixed cost plus desired profit divided by PV ratio. So fixed cost we have 2,000 and desired profit we want to earn 5,000 and PV ratio we have calculated 0.20. So 7,000 divided by 0.20, 35,000 is the sales required to earn a desired profit of rupees 5,000. That's all. So this is the end of problem number 18. So in these 3 videos, totally 18 problems I have explained on this CVP analysis. So if you're satisfied, give a like to my video. Share my channel among your friends, among your circles, so that more students can watch the video and enhance the knowledge. Give your comments on these problems, on these videos, on these lectures. and subscribe my channel if you have not yet subscribed. What I'm seeing, my viewers are increasing, but subscription is only just 20-30% of my viewers. Please subscribe my channel and buy the super thanks which is given below my video. Inshallah, we'll continue the next problem in the next video.